Bill, tell me a little bit about what the current state of the capital markets are and how Octane is continuing to raise capital for the portfolio companies.
I think, Tom, if you talk to anybody, it's a tough environment out there right now. And it really hasn't gotten much easier over the past year. I know we keep talking about that, and maybe it will be easier come Q1 of 2025. We certainly hope so. But it's not preventing really good companies from getting funded. If anything, there's enough dry powder and investable capital sitting on the sidelines that they're looking for great company. I think it's particularly difficult for a first-time entrepreneur that doesn't have any track record to be able to go off. That shift is, then it's a bit easier, perhaps, for companies and entrepreneurs that have done this before and have had a successful exit because they've got something to point to. At the end of the day, in 2023, we helped companies raise almost $1 billion. It was $947 million. We continue to see good companies get funded, but you've got to find the markets where that capital is coming from. So even though we're in Orange County, Southern California, which is robust with wealth, the majority of our companies on the health side anyway are getting funded from capital out of Boston or New York. That's where the capital is flowing in. They just see incredibly great value in the companies that are being started here in Orange County. I'm bullish on how this goes forward. And one of the other things is we've historically just had people come out of our accelerator and we've made introductions to them. And now what we're seeing is we have a capital and growth platform that really is interactive with a variety of investors. It could be corporate, institutional, family offices, or individuals. So we're seeing robust activity in again, really good companies. And the final piece on that is Octane was the founding general partner of Visionary Ventures back in 2015. That fund has invested specifically in ophthalmic and medical aesthetics companies, and like many other funds, is very low on capital right now, so probably will move forward with a third fund later this year. So we see robust ability to create more capital around their companies that are coming out of here.